Hi everyone, Drini here. Welcome to my channel. So today we're gonna take a look at Thetan Arena and its token THG. So this is the first time we're gonna look at THG. So because of that, I do want to look at it at a larger time frame first to see where we are. So after its launch back in September 16, it just keeps going up, isn't it? But what I want to point out here is over a larger time frame, what we're starting to see is we're starting to see an Elliott wave structure. So for those of you who are not aware, Elliott waves typically come in 5 waves. So this is wave 1, this is wave 2, this is wave 3, you have a correction of wave 4, and the final impulse wave of wave 5. It will then continue on to do an ABC correction sometime in the future, but because we don't know where wave 5 will be, this is very hard to diagram right now. So let's just focus on what we have over the short term. So in Elliott waves, the corrective wave typically comes in 3 waves. So it's waves within waves, basically. So you have an ABC correction that is currently playing out for wave 4. The key question that a lot of traders always ask is, where will this C wave end up? Because C waves are very unpredictable. Sometimes you can just hold this structure and we can continue to move forward. But a lot of times C waves can correct hard. You can actually see it in like the Bitcoin charts when it fell from the highs of 64,000 in May all the way down to 29,000 at around June-ish. So it's really hard to tell where C waves can actually go. But let's look at recent price action to see if there are any indicators to signify where can we potentially go. All right, so I'm going to focus on the 4-hourly time frames for THG here, starting from the end of wave 3 and the start of wave 4. And the thing to note about technical analysis is a lot of times people think in very singular terms. They think there's only one pattern playing out and there's only one target playing out. That's actually not true. Patterns within patterns exist. It's really all about having a distinct point of view or mapping out all of these patterns to really try to understand what is the likelihood of going up, going down, when will each situation play out. So in this case, what we can see here is we have a large descending triangle right here. Now, descending triangles tend to be bearish formations, so they tend to be bearish patterns, but only once you have broken through this support structure. But they can flip to the upside as well. So it's not a guarantee that just because it started to form bearish patterns, you're only going to go down. But one thing to note is, again, like I mentioned earlier, patterns within patterns exist. So in this case, you have a descending triangle here that is part of a much larger descending triangle right here. So that makes it very hard to predict what's going on over the short term, because now what do you do? So this is where technical targets are very useful, because it allows us to map the potential scenarios that may play out for this wave 4 correction. If price breaks out of this trend line, we have 2 technical targets to the upside. So let me just copy this. So wherever the price breaks out, and this is the tricky thing about descending triangles, when you break out of the upside, it's very hard to predict where the price action is because the trend line moves. So if it happens sooner than later, then the technical target will be here. But if it happens later, then the technical target will be somewhere around here. But nevertheless, let's say we break out somewhere in the future, this would be our technical target. So your technical target can range from 950-ish all the way up to, so it's $9.50 to $10 basically. So this is the tricky part about technical targets to the upside on a descending triangle. Technical targets to the downside, however, are easier. So because this is a standard support line, so this price never changes. So the thing to note is, if we break structure, meaning if candles start to form below the triangle and you close that candle on, let's say on the 4 hourly, you have a candle where price action stays below the support line, then expect two technical targets. The first one is this technical target of this smaller triangle, which is around $5.43, and expect a larger technical target of this line of this larger descending triangle, which goes all the way down to $3.75. Does that mean then that we're screwed? Not really. I think it's important to understand that as long as we hold this support line, and if we break out of here, then we can invalidate the technical targets to the downside. So my personal opinion here is this larger descending triangle, we may not play out, but the $5.43 target may be realistic if we broke support. So again, if we broke support, then unfortunately we have to go short here. But what are the scenarios to the upside? So I think one thing to note is if we look at the RSI over a longer period, you can see that I have here an RSI support line, a bull support line. How do I know that this is a bull support line? If we go back to previous time frames, whenever we start the run up, it is always at these levels. So this RSI is currently at 43. So the RSI value of 43 appears to be our support line. Every time we fall back there, it's usually after a major run up, and then it corrects, it falls back to the support line, and we move on from there. Now, the bullish case for THG is while we have fallen here, and also we have fallen below the EMAs, we are still resting on the RSI support line. So there's confluence to the fact here that we may break out of here, and the bearish scenarios may not play out. That is it for THG. We'll continue to monitor where we are. Full disclosure, I own THG. It's one of the better play to earns in my opinion. So the THG token is something that we will definitely track over time. Please like and subscribe, hit the notification bell, and I'll see you next time. Bye-bye.